Thank you for joining iMeet. When you hear the tone, you will be the 31st person to join the meeting. This meeting is now being recorded.
All right, sorry about that. Hey, good afternoon. This is David Blake, and this is a Tuesday Tech Talk. And today we're going to just review the market going forward over the next week or two. We'll also look at a couple of the different indexes, some of the industry groups. Usually I talk for about 20 or 25 minutes, then we open it up to you all and allow you to ask questions about individual stocks or industries or just anything that's on your mind about the market, and see if we can help you make some money. Today what we're going to try to do is we're going to go over an update with the CTI and the market letter, or the market edge market posture, and kind of see where we're going forward. If you over the last couple of weeks, you'll notice you'll know that we are scheduled, or we've projected that we may go to a sell as early as this Friday. What I want to do is show you what we look at to determine whether we will do that or not. So what I want to go over is some of the momentum index and the sentiment index. If you're not familiar with the CTI, it's our proprietary market timing indicator. Stands for the cyclical trend index, which is used to forecast the intermediate term trend direction of the market. It uses 5 cycles that often result sine waves that are found in areas of motion in the universe, and also based on studies have demonstrated a pretty good track record that can pick up price reversals at anticipated time intervals of the Dow Jones and the market. Now, the CTI is grouped with the momentum index and the sentiment index to call periods of strength and weakness in the market. Since 1974, it's outperformed the Dow about 2 to 1. We actually stopped using the CTI around 2009 when the financial crisis came in. The reason being we couldn't get it back into sync, mainly because as the CTI is based somewhat on business cycles and trends, whenever you would have a normal slowing or speeding up of the regular market or business cycle, the Federal Reserve would step in and prop up anything that was slowing down, and so you basically did away with the business cycle for about 4 or 5 years. And we brought it back in around 2011 or 12. I think what happened was that the business cycle adjusted to zero rates and began to progress itself and have slowing periods like it used to have. So anyway, we've done quite well. And back last year in 2015, I think the CTI model was up about 18% versus just small loss for the Dow. This year, taking a look at it, what I want to show you here is this is the market posture performance for 2016. What we have, let me get my pointer here. Okay, what we have is we either have strong periods or weak periods in the market. And so far this year, we started out on a sell in the market back in January, and from January 1st to January 29th, we projected a weak period. The market loss was down 958 points, which was a good call on that. We reversed to a long on the market on the 29th, and we stayed long through March 25th. On that call, we picked up another 1,049 points. We went back. We had about a week or two where we were neutral in the market, which you'll see today that we actually may go to a neutral in the market going for the next week or so here. But on April 8th through May 27th, we projected a weak period there that we actually made money for a little while. But to use a disciplined approach to this, we always close out the position on a Friday and open it up on that Friday's close. So by the time it got to Friday, the market had started to rally already. So we lost 296 points during that period. Okay. From there, we went back over here. We went long again May 27th. We stayed long all summer. And then reversed the course to a week again on 9/2. We picked up another 697 points over the summer. We went bearish on the market on September 2nd and stayed bearish through October 21st. The market was down 346 points, so we made that on that. And then on October 21st, before the election, which was a little surprising, but we went bullish again, and we remained bullish to this point. As of today, or this morning, we're up about 1,650 points on this call. So for year to date, then what we're looking at, the Dow Jones has made 2,371 points so far year to date. It's up 13.6%. And if you had been going long and short the diamonds or the SPY, especially with the diamonds anyway, you'd have picked up 4,327 points, and you're up 24.8%. So we're just almost doubling what the Dow's performance has been year to date. Okay, rather than just when the CPI cycles begin bottom or top out, rather than just use it as a black box type of thing, or where we just automatically flip to bullish or bearish, we add in the momentum index and a sentiment index just to rate how the market is going. Now, the momentum index, in other words, if we're expected to go to a sell, if the momentum index is telling us the market momentum is too strong, it's going higher, like possibly what we have right now. What we do is we look at nine broader market indexes to that of the Dow Jones, and what we do is we look for positive or negative divergence by comparing the relationship of these indexes and a few other momentum indexes to the Dow. If the Dow is marching forward and outperforming everything, the momentum index will tend to go negative. If the other indexes, like the Russell and NASDAQ and S&P and transports, are all outperforming the Dow Jones, you're going to get positive momentum, and that'll result into a +5, +6 reading, something like that. Now, along with the indexes, we also measure in the NYSE Advanced Decline line. We do a 10-day moving average of that to see whether it's making new highs along with the Dow. We also we want to see expansion or contraction in the weekly new highs versus new lows. We look at the 5-day moving average of the TRIN, the Zweig breadth indicator, McClellan oscillator, McClellan summation index, and also the unchanged issue index. Now, if you're not familiar with some of these readings or indexes, oscillators that we use, if you go to the Market Edge homepage, in the lower right-hand corner, we have something called the Education Center, and some of the first articles talk about the CTI and the momentum index, and they'll go over what these oscillators are looking at when you look at it. Okay, so along with the CTI and the momentum index, we also want to measure what the sentiment index is, and this is going to measure bullish or bearish sentiment by looking at 11 different sentiment indicators. Basically, whenever the crowd gets overly rambunctious or too optimistic on the market, that's a bearish signal, and the sentiment index will go negative. The crowd gets a little bit too pessimistic, where everybody thinks the market's going to zero, then we'll get bullish numbers, which is positive for the market. Okay, as of last Friday, the sentiment index indicator had fallen to a -2, which is bearish for the broader market. We're looking at a little bit too exuberant here for what we like to look at. Last week, also, the percentage of bullish investment advisors had hit 58.8, and that generally it's released on Wednesday. That generally runs about a week behind. If it gets above 60, that's normally a red flag and you're going to see a market pullback. I would expect to see, but it's released tomorrow, to see that probably go over 60%. But again, these indicators are in the Education Center on the homepage of Market Edge, and here's something to take a look at. All right, so where are we right now with the CTI? Every week on the weekly market letter, when you read that, we give you an update as to what's projected to be when we're projected to go to a sell, but that can change. And I had somebody over the weekend say, "Well, we've been dead wrong on this thing, but we've been bullish." But I said back in October, it might be something where you want to lighten up on if we have a rally, you may want to lighten up on positions because the CTI is scheduled to go bearish at the end of December. That didn't mean for you to sell everything right over here as soon as the market took off. But if you follow the weekly market letter in there, when it goes to the section of the CTI, we're going to tell you what we expect. We're still bullish on the market. The leveraged index funds that we'll go over here in a little bit, we're still long on those things, and they've had quite a run, since that October 21st buy signal. But anyway, so you can see this thing running over here. You're kind of stepping in front of a freight train. You're very overextended, overbought by just about any measure. By the MACD is still going up. That's overbought. The RSI, CNBC was reporting that the 14-day RSI is as high as it's been in the last 20 years for the Dow. So you're not going to get any more overbought basically than what you are. But then again, we have another 85 points to go. All right, what I wanted to explain was in today's call, the fact that we are supposed to go to a sell in the market this Friday, or potentially go to that, and the big news on that is the 4-year cycle could be coming to a close on this if we go to a bearish call on this. Now, when the cycles reset at the start of a new cycle and the start of a new 4-year cycle, two things generally happen to the market. Number one, you have a big sell-off where you watch this thing and it bottoms, and then we start what will be the next bullish trend. But sometimes you get what you call a blow-off top. Now, a blow-off top, if you're not familiar with that, this is almost a perfect example of that. A blow-off top is where a stock or an index takes off. The volume is double, could even be triple, what it normally is. And what happens is that you have investors basically that are saying, I can't miss this move. I got to buy no matter what. And that's generally when a lot of the smart money will be coming out. And what I want to do is I want to watch this to see how the momentum indicator, or momentum index and sentiment index, whether they confirm that possibly this was the end of the CTI 4-year cycle, and this kicked into the new cycle, or whether this is going to all of a sudden collapse over in here, and that will be a bottom somewhere over in here that will begin the next cycle. I don't know that yet, and we won't know until we see what goes forward over the next couple of weeks. So what we're going to do is we're going to go to a neutral on Friday, which makes sense when you're this overbought anyway. That doesn't mean you sell everything and wait to see what's going to happen. It just means that you have your stops in. I'm certainly not going to be buying any new positions at this stage, and we'll see what happens. Whether the market goes sideways like this, consolidates some of the gains, and then maybe we start to move higher again. If that's what happens, then this will be the start of the new 4-year cycle, and the longest cycle actually lasts 214 weeks. So I think over here would be like 208 weeks or something like that. So all the cycles, this could work for it. This could work in the projection. If that is the case, we'll stay on a buy. We will go back to a buy over in here, and that long position will stay probably bullish in the market into March or April. If we go neutral here, then the market begins to sell off over here. That means wherever we end up, put in a bottom and then make a new high, that will be where we'll reset the cycle. So as you can see, it's not an exact science, and every week I have to go over this stuff. Normally we'll look at the weekly chart rather than daily. But again, we'll probably go to the neutral on Friday, and then over the next 2 or 3 weeks, if you read that market letter, we'll see what it's going to do, and whether we're going to start to see it collapse, or if it goes sideways and consolidates, then we will reset the cycles back to here. In either case, if that's the case, you'll keep on your long position, and once we consolidate, we could go higher. Now, this is another chart I wanted to talk to. I've been harping on this for all summer, all along here, where this thing would come up to resistance, fail to break out, come back, fail to break out, fail to break out, and then all of a sudden we break out here again, also back at the 1st of November. Now this to me, and back over in here, this means that we've had a Dow theory buy signal on the market, which a lot of traders, a lot of technicians, and market participants will look at which could add credence that this actually was the bottom. And if it is, that's not a big deal for our market posture, because that means we're long, we went long here, and then we'll remain long, and this will probably extend its way, sideways and work its way, into the March-April timeframe. However, if this thing starts to collapse along with the Dow, then we'll, probably see a bottom over in here for the market. But either way, this again, like I say, is confirming the Dow's move, which again leads me back to here. But it's going to take us probably a week or two to see what happens. And I would just, like I said, at this point, I would just hold my positions and look for places. If you have something that's starting to fall apart, underperforming the market, maybe you switch it over into one of the financial, the oil stocks or something like that could be outperforming the energy sector, materials even. So last week on Friday, the momentum index was at 0 and the sentiment was -2. But the momentum index was telling us that the Dow Jones has outperformed all the other indexes, actually, except for the Russell 2000 and the transports. Every other index has underperformed the Dow, which is somewhat of a red flag. That's negative divergence. And so, not to confuse you on all this stuff, but I want you to see, I just want you to be up to date on this thing, especially if you're holding some of these leveraged ETFs. Now, if on these calls, if you're new again, since the beginning of the year, we've one of the portfolio things that we run, we do a very speculative investing. We look at the triple index ETFs. We always suggest going with all 4 different indexes. We use the Dow, the S&P, the NASDAQ, and the Russell 2000 because they don't always just move the same percentage-wise. If you went long on the triple ETF back in on October 24th, when the market posture changed to bullish, the Dow's up, that index is up 32%, S&P 19, the NASDAQ has underperformed quite a bit, mainly because of the big name tech stocks. It's only up 5%, but the small caps have outperformed. They're smoking. This thing's up 41%, which is a nice move, to say the least. Now, if you traded these things all year long, going the long and short, and when we switch over to bearish on the market, we'll update these as to which ETFs you want to buy. But year to date, this thing's up 70.4% if you had bought all 4 of them. That's not compounded. That is putting 25,000 or 5,000 or whatever into each of the ETFs, and then putting $5,000 into the next time when we go bearish or bullish, and we're not compounding those results. So without compounding, you're up 70.4%, year to date, which is pretty nice. But again, that's a very speculative trade. I wish I was that. I actually sold my long leveraged ETFs right before the election. I didn't trust it. I didn't want the thing to all of a sudden fall down 8 or 9%, and I didn't get back in, unfortunately. But if you have been playing these along with what we're doing, you've had quite a year. Okay, that's basically what all I have today. And the reason being, I don't want to cloud you up and get confused anybody looking at a whole bunch of different things. So what I want to do is open it up to questions now, because there's a lot of stuff on here that you may not have been familiar with. If you want to have some questions about the CTI, or if you actually want to look at some different stocks or something, we can do that. And I can share the screen and take a look at some of the things here. All right, where can I find your recommendations on triple ETFs buy and sell signals? Okay, here right here, this would be right here. If you came in at the beginning of the year, you could go and find the prices on these, and you'll look at them. I actually, maybe next week I can go on that and tell you what you did. I have a hold on one second here. Okay, if you would, okay, we started out with on the short side, on the bearish calls. Those symbols are going to be SDOW for the Dow, SPXS for the S&P 500, SQQQ for the NASDAQ, and SRTY. So we went, we were bearish coming into the year. We closed those out on the 29th of January. We then went long, bought the bullish ETFs on the 29th. We closed that out on the March 24th. We then were neutral for 2 weeks. We bought the bearish again on April 11th, and we closed that position out on 5/27. Then we went long on May 31st, closed that out on 9/2, and then we went bearish again on 9/6 and closed that out on 10/21, and we went bullish again on 10/24, which was the Monday after we closed out the bearish call, and we're still bullish, actually, as of right now. Okay, some questions are coming in right now. I'm going to go ahead and close this screen and open it up so you can see the charts. I see a couple questions coming in on some individual stocks here, so hold on. Okay, so you should be able to see the chart now, can you? Okay. I had a question. What do you think of HEDJ? Okay, this is the Europe Hedged Equity Fund. I like this. This is, I think Europe finally is starting to go. The last leg of their quantitative easing looks good on there. Since this is an ETF, I'd also like to see that you're seeing some accumulation. You know, you had some selling going off in here, but you're starting to see good accumulation. Again, you broke above the 50, 100, and the 200-day moving average. This hedged equity fund, if you're not familiar with that, if you buy a straight ETF for a foreign country, you will lose up to 3-4% sometimes of your gains due to a currency exchange when you sell the thing. This automatically will be traded in U.S. dollars. So when you sell it, you're not going to lose part of your gains due to any hedging. So I do like this. I think the Europe market should play catch-up ball. What you're hoping for is, when you go overseas, especially in the emerging markets, if they're underperforming at some point, either they're going to bring the Dow, the Americans, the U.S. equities down, or the U.S. equities are going to help pull that up. And I think in this case, especially in Europe right now, I think you're going to start to see more gains in that, especially now they have some of these banking problems in Italy closing out. That's one that EWI is the Italian ETF, which looks fairly good in this case. Here's got a lot of questions coming. Before I go to the next one, let me write these down. J&J, UNH, FCX, Nugget. Okay, I'm run over there real quick now. Okay, the next one was FXO. And this is the First Trust Financial Alpha Dex. Again, it's kind of following. This would be, I guess, I'm not familiar with this so much, but I usually buy the XLF. But if that's what this is, you're seeing some nice accumulation down here. The financials are overbought, and you have gotten a lot of downgrades, mainly on valuation plays. I was watching Jim Cramer last night, and he said when the banks keep going up in the face of downgrades, that means they're going higher, which probably is the case. I'm not sure I would be jumping in there right in here to be buying the financials. However, any kind of pullback in the broader market, I would buy these, especially for the longer term. If it would come back down here where where you maybe retrace 50% of the move, say if you went from here to, if you could get this thing fall back to this area, which would be Fibonacci retracement of about 38.5, 38.2, and then or maybe even 50%. I would be a buyer of the financials in here, especially for the longer term. So these look good. They're just overbought by just about any measure. Also a little bit of negative divergence down here in the 14-day RSI. You have a breakout to a higher high, but you're making a lower high on the RSI. That's a little bit of a red flag. So again, I probably wouldn't be jumping in to buy these right now. I might just wait to see what happens over the short term. Okay, APC. All right, let's take a look at, let's see, FCX. What's wrong here? Okay. All right, FCX. Again, I don't have the rocket shop up here. You're going sideways in here. Now, a lot of this, you know, the main problem with Freeport-McMoRan right here is they expanded into the oil business when oil was trading at about $100 a barrel, and that is helping it out right now. They're still probably losing money on some of that stuff, and then the fact that they have a lot of gold. Gold has been kind of a wreck for the last couple of weeks. You can see that even though it's going sideways here, it's running out of momentum a little bit on this. You still have real good accumulation in here, mainly on the copper trade. Copper is up 25-30% over this area. So on this one, I would watch this thing. If I'm looking to buy, I would, if this thing breaks below this 15 area, you might be able to get a chance down to buy it or get around 14. I think longer term, you're okay, but I wouldn't be chasing this in here, especially with this negative divergence down here. And the momentum slowing. However, if you look at the up-down slope, you still have good accumulation in Freeport-McMoRan. Johnson & Johnson had a heck of a day, I think, yesterday. Yesterday it came up. Funny, it ran into resistance right here at the 50-day moving average, which is a bit of a red flag. Also, you have the 200-day moving average at that point. I think that the pharmaceuticals may be overbought and be able to buy on pullback. You're still seeing some distribution here on the up-down ratio. So you're not seeing a lot of positive buying, but it's just not my favorite group. Let me put it that way. I think if I was going to buy into some of the healthcare stuff, I would probably look at some of the biotechs. Right over in here, this was Trump saying that he was going to take a look at drug pricing. But it's not my favorite group. If you look at the XLV over here also, that's the healthcare ETF. Now there is some positive over here. You do have a high or a low after you had this spike up, going to the election. This was the election here with Hillary. I thought Hillary was going to win. When she lost, you had to spike up, and then it's kind of worked its way back down. Again, even the XLV, the ETF has resistance here at the 50-day, so that's the 50 days coming down. Just not one of my favorite sectors. I think there's better places to go at this stage. Okay, here's United Health Group. Now this has done well. I'm not exactly sure why. I know the earnings are well. That's under accumulation. Momentum has slowed a little bit, somewhat overbought. But I know the earnings and all have been going up for this thing, so I don't have any problem with this stock. I think it's fine if you can't hold this last leg up or where this little gap is. If it comes down here, it comes back down to the gap at around 154 area. That would be a red flag for me that you could come back down and go lower. But as long as it holds this gap, I think you're fine on that. Nugget, N-U-G-T. Okay, this is another one that, unless you're trying to find a bottom, the gold mining stocks haven't done very well at all. They haven't done well since when? Was this back in August? A few bounces. But until you actually see gold itself, you can follow that GLD, GOLD, some of these ETFs until you start to see that come up. And also, you'd like to see gold, if you follow it and some of the data things, you want to see gold get back up above 1,200, maybe even 1,230, 1,250 area before you want to start playing these. Because as far as I keep seeing gold going down. It's remarkably cheap in here probably, but it's not going to go up until gold starts to catch a bid. The APC, I think that's Apache. No, Andarko Petroleum. I like this. I've heard some good reports. You're in the right area. It's gradually worked higher. Higher oil prices help the big names and the small names. The refiners. I lean more towards the refiners than the bigger companies, but I think Andarko would be one that looks good. It's in one of my portfolios that one of our model portfolios over here. I think you see this going higher. One thing you have to watch with the oil, I thought crude oil would probably top out around between 52 and 55. Right now it's staying up around this 55 area mainly because of the production cuts. We want to make sure that even with the production cuts, we don't start to see a buildup, which means that there's not selling. But I think at this stage, if we're going into expansion in the U.S. and in Europe, it should be fine. Note that the Asian markets, especially China, have kind of rolled over the last couple of days. But just keep an eye on that. I think the oil stocks are where you want to be. MDT and XXIA and MTL. Okay, I got three more, and then we're gonna have to quit after that because we're running out of time here. But MDT. Medtronics, I think. Yeah, Medtronics. Again, you're fighting a battle in here with these medical stocks and pharmaceuticals. There's other places to be. You don't want. You can either look for something that's finally bottomed and has to go up, or you can try to go with what has the momentum. And the momentum is the energy stocks, material stocks, the financial stocks, consumer discretionary. You had the consumer sentiment and consumer confidence reaching multi-year highs now, which means the consumer is ready to go. He's ready to spend money, so that helps the consumer, the Home Depots and some of the retail stores. But this one here, you have a bounce, but you're kind of at the back of the train, hoping that you're going to catch up on that. And even the accumulation thing, you don't see a lot of accumulation in these stocks, so that's probably not the place where I would want to be at this time. XXIA. I'm not familiar with this, so I don't want to say much at all. It's breaking out, overbought. Momentum is slow just a tad. Would I buy it here? Probably not. But you could buy it on a pullback back into this area, back in this range here, this 14 to 15. I imagine this is probably one of these volatility indexes, if I'm not mistaken. But I don't know what it stands for, so I'm not going to guess on that. And last one here to look at, MTL. Methyl AOA 8, that's an ADS. Not familiar with the company itself. Chart looks like it's put in a bottom. Had a nice. This may even be some bad data on data point on that. I'm not sure. But again, when the market's taken off, I'm not. You don't want to be looking at the stocks that are to see if they're going to bottom or not. Now, let me check something just to see if I can see what the MTL, just to see what area this is in. I'm not logged into market, so I don't know what if it's a bank or whatever, foreign bank or something like that. But anyway, again, you want to be where the momentum is when the market's on a rocket shot like it is. You don't want to be looking to for stocks that are not participating in the run. You want to go with what's going until when the market's going sideways or slightly down. Then you can take a look at these things, and when the market bottoms, then maybe these have bottomed too. But you don't fight the trend and look for something. Well, the market's going straight up. I'm going to look for something that's way down. That's not the way you want to do it. You actually want to look. You want to get into the stocks that are in the strongest industries. Again, you can go into the Market Edge Industry Group analysis and do a relative strength screen on that and find out what's outperforming, and that's where you want to be looking for the stocks to go. Okay, I've got to wrap it up. We've already gone too long on this one. I apologize for going over, but I hope you got something out of the CTI calls. Again, at this stage, I'm inclined that I'm probably going neutral on Friday. We could stay neutral for a week or two, and then we'll have to see how the market reacts, how the momentum and the sentiment index react, And if they start to move higher, then we may reset back the CTI and begin the new bull market, in which case we would be bullish well into the first of the year. If you have any questions about all this that we talked about, give me a call or give me a email. I'll try to get back to you. Thanks for taking your time out of your day to join me.